Accounting equation based illustration. Let's try to solve this one now. Okay. Once again. Now, accounting equation, asset equivalent to liabilities plus capital. Is that okay? This is called accounting equation approach. I assume the same equation for solving this entire 12 transactions. 12 transactions. Okay. For after every transaction, how can we pass entries? How can we post this? Okay. Introduced 80,000 as cash, 5,000 by stock. Means owner has sponsored this much money. Okay. We assume accounting equation approach here. Accounting equation approach. Come on. What happens here? Cash is an asset, stock is an asset given by owner. So that now it's a business responsibility to pay any amount later to the owner. So that is capital. Now, capital being 85,000 because he has given these two. And in asset, we have stock rupees 5,000 and we have cash rupees 80,000. The total of asset 85,000, total of capital 85,000. Of course, we don't have liabilities currently. This is the first one. Is that clear? Let's move on to the second transaction from there. Second transactions from there. Purchased plant for rupees 30,000 by paying 1,500 in cash. Plant is an asset. Now we have to add. Payment is made in cash, then the cash will be reduced. Balance at later date. Later date means we have to keep the party's name in our mind to pay it later on. So that is called creditors. Creditors. Is that okay? Plus item. Capital 85,000 and liabilities under that creditors for asset, value being out of 30, 1,500 is by way of cash, then amount payable to the creditors later period being 28,500. 28,500. So that 28,500 becomes creditors for assets. So capital plus liabilities here being 1,13,500. Then in case of assets, already we have stock rupees 5,000. Stock rupees 5,000. Cash, we have 80,000 rupees. 1,500 is paid. After this payment, the cash becomes 78,500. We have posted the creditors, posted the cash, and a new asset comes in, should be posted in the asset side, plant, value being 30,000. 3 items: capital, liabilities, asset. As per the accounting equation approach, asset should be equivalent to capital plus liabilities. The capital plus liabilities is 1,13,500. The summation of the assets, three assets we have 30,000, 5,000, 78,500. The overall value being 113.5. 113.5 thousands. Clear? In Singar Academy's text, it may be written as a single liner. Okay. You can write that way or this way also. Clear? Now we'll move on to the next one. In the third transaction, deposited 60,000 into the bank. Now tell me what happens because of this case? What happens because of this? Deposited 60,000 in bank. Bank is a new account, being the asset. Amount you are keeping in your bank is your asset. That reduces your cash balance. That reduces your cash balance. The cash is deposited to the bank, so cash reduces. How much cash you have currently? 78,500. Out of 78,500, you are paying how much? Okay, 60,000 into the bank. It means it remains same. Liability side remains same. Clear? No problem here. Which side is now changing? Asset side. In case of asset side, third condition, third one, asset. We have plant as it is, this value being 30,000. Stock, I have not touched that at all, remains 5,000. Now cash. Cash is now deposited into the bank, so it will be getting changed. Instead of that, we need to have a new account called bank. If I go and verify how much I have money in bank, it shows 60, and then my cash box shows only 18,500. Out of 78,500, 60,000 is deposited, balance is only 18,500 I have. Now also, asset is equivalent to capital plus liability is 1,13,500. Is that clear? Now let's move on to the fourth transaction. Fourth transaction. Okay. Let's see what happens in case of fourth transaction. Clear? Purchased office furniture. A new asset comes in, should be addable to the assets made by check. Then there's a payment from the bank account. So bank account will be reducing. Asset side will get affected, but in the liability side we don't have any changes. It remains the same. The entry being capital being the same value. The value being 85,000. What about the liabilities? Liabilities, under that, creditors for assets remains the same. This value being 28,500. Okay, in the asset side, third one, in the asset side, what happens? Already we have plant, one more asset comes in. So plant 30,000 rupees. New asset comes in, furniture. So if I go and check what are the assets I have one additional assets called furniture, and stock that remains as it is. I don't have any adjustments in this. And bank, it gets affected, right? Originally we have 60. Because of this purchases, I made a payment by way of a bank check, so it reduces the bank balance. Now the bank balance is only 50 and cash remains as it is, 18,500. 18,500. Is that clear? Now the total being 1,13,500. 1,13,500. Clear? Hope you will be now able to understand how to prepare the balance sheet directly. This is what you call balance sheet. We got the balance sheet directly by using the accounting equation approach. We never bother about the journal entry, never bother about the ledger, and never bother about the trial balance and all. Directly we'll get balance sheet. This is the practical system. Ledger posting is a mechanical work. Trial balance also mechanical work. Preparation of trading P&L account also mechanical work. What is a knowledgeable work or needs experience or accounting concepts? Journal entry only. Whatever the transaction may be, that transaction first you have to record. Then from there it goes to ledger. From there it goes to trial balance, and finally final goods. Clear? All the mechanical work can be handed over to the machines. That machine will do. Machine will do. In practical system, what we do is the same. We are posting only the ledger. The final accounts is prepared. You want to see that? Do you want to see how can we prepare using the machines? Yes or no? After this, I'll explain. Okay, how can we use the some softwares? That's a free software also available instead of Tally. Tally, of course, it's a paid version. You have to pay. And for a small business people, they can use the accounting instead of Tally software. We can use the manager software. I will explain how to use the manager software to solve one illustration. Is that okay? Now, this one is over. This one is over. Fourth transaction over. Clear? Now, what happens? Shall I go for the fifth one? Fifth one. Purchased goods worth rupees 80,000 for cash. Purchased goods means it's all about purchasing and selling it later on. Okay, selling it later on. Then it will be always named as stock or simply purchases. And for cash, so there is a decrease in the cash balance. 3,500 in credit. In credit means I have to keep some party's name in my mind to pay it later on. Sir, I have taken goods so much worth from you, so I have to pay you later on. Okay, if the name of the party is not given, and automatically we can have a common name, maybe creditors. So creditors name may be used. A common name, creditors will be used. Now, liability side, capital remains as it is. This value being 85,000. Liabilities remains as it is. Okay, where creditors for assets, the value being 28,500. Right. What happens now? There is a new credit item comes. This is called creditors for trade, otherwise trade creditors. Trade creditors, isn't it? The difference between trade creditors and asset creditors. What's that? If I purchase the asset without any payment, that creditor, the party to whom I have to pay you, no, named as creditors, otherwise trade assets creditors. For the regular business of operations, if I am purchasing any goods for the sale purpose, purchasing for sale purpose, that is called trading activity. It's called trading activity. Is that clear? In that case, that creditors is named as trade creditors. Clear? So the value being 8,000, out of that cash is 3,500, balance for 8,000 for cash and 3,500 in credit. Sorry, entire 3,500 in credit. 3,500. Overall goods purchase being summation of these two, 11,500. Is that clear? Goods worth 8,000 for cash and 3,500 in credit. So overall value being 11,500 rupees worth of goods purchased. For that 3,500 will be payable later on, 8,000 immediately paid. Now in the asset side, okay, we have plant remains undisturbed, furniture remains undisturbed, and stock. What happens in case of stock? 11,500 stock will be increasing from the previous one. So 5,000 plus 11,500, 16,500 is the new stock, as well as cash decreases to this extent. Bank remains as it is, no change in the bank balance. And in case of cash, 18,500 minus 3,500. We are going to subtract this one. So now the cash balance decreases to how much? 8,000 rupees is decreased. So cash balance is 10,500. Now get the total. What is the total of the capital and liabilities? Come on. Use the calculators. Is it 117,000? Yes or no? Plant value 30,000. Right. Cross verify this. 1,17,000 rupees. Is that clear? Use always the calculators. Clear? Now let's move on to the next one. Let's move on to the next one. This is the starting for the next transaction. Transaction number 6. Transaction number 6. What happens in the accounting equation after this transaction? After this transaction, goods amounting to rupees 4,500 sold for rupees 6,000 on cash basis. So goods will decrease by how much? 4,500. Your cash increases by 6,000. Any decrease will have the equivalent increase also, but there is a difference, 1,500. What does it mean? Profit. Profit is for whom? For the owner. So it may be adjusted in the capital. Clear? That's all. The new one being capital 85,000 plus 1,500, 86,500. This capital is inclusive of profit. And second one is liabilities. Under that, asset creditors usually named as sundry creditors, and creditors due to the trading activities named as trade creditors. I am going to use the usual terms used in our accounts. So this will be 28,500 and this will be 3,500. And in the asset side, two assets were getting affected. Rest of the assets are remaining the same way. Plant 30,000 rupees, furniture 10,000 rupees, stock 16,500, stock 4,500 decreases. Now the new stock value being 12,000 and bank remains unaffected, 50,000 rupees. Cash now gets changed. 16,500, 10,500 plus 6,000, 16,500 is the new cash balance. Now overall new total being 1,18,500. Is that clear? So after the sixth transaction, what could be the balance sheet? Accounting equation approach. Shall I go for the seventh equation? So after the seventh transaction, what could be the position here? Seventh one. This is what about the balance as per the sixth transaction. I may now record the seventh transaction's detail here. Seventh transaction. Tell me, goods costing rupees 8,000 was sold. Then goods value is decreasing. Sold for 12,500 in credit. Any sales in credit, then you have to keep the party who has taken from us. In our mind, if the party's name is missing, we can use that. Goods costing 8,000. Goods will be decreases by 8,000. A new asset, debtors rises by 12,500. The difference between these two, how much is there? 4,500 should be what? Gain, profit. So profit will be added to owner's capital account. Is that okay? So owner capital account is inflated by 4,500. Goods is decreasing by 8,000 and a new asset comes here, debtors. Okay, debtors. This value being 4,500. Have you noticed that the way of writing in the asset side as well as in the liability side is totally different? So always remember the fixed assets will be posted in the very first and the liquid form, cash form will be posted in the last. Okay, those cash or money or amount available for immediate settlement will be posted in the last one. Those assets will be recorded or converted into cash only the last of the sale at the business closure. Only at the time of business closure I am going to get. Then that will be posted in the very first. This way of posting is called permanent basis of posting. Permanent basis of posting. Is that okay? Usually the land and building, you will sell only when you are closing the business, not very often. In case of plant and machinery or investment, sometimes, but very often whenever there is a need of money, ready cash will be used, then bank some short-term money may be used. Is that okay? That's the order I'm usually following. Of course, at the beginning level, you just understand the logic. In the later period, you can understand how to keep all these things in systematic order, right? Now, let's see. In the liability side, capital value is affected. 86,500 plus 4,500, now it is 91,000. And second one is all about liabilities. Under the liabilities, we have sundry creditors, the value being 28,500. Trade creditors, the value being 3,500. Total of liabilities being 32,000. And in the case of asset side, assets, as per the permanence basis, plant remains permanently for a longer period. So I post that value in the very first 30,000. Furniture also be kept with us for a longer period. Okay. Then stock value. Stock value is now decreases. Out of 12,000 rupees worth stock, 8,000 rupees worth stocks were sold. Now on investigation, you found that you have stock only 4,000, and in between one more asset emerges, which is called debtors, maybe trading purpose, right? So trade debtors, this value being 4,500, and then bank remains unaffected, 50,000 rupees, and cash remains unaffected, the value being 16,500. Huh? Which one? 12,500. Okay, 12,500. Okay. Good. This is 12,500. Hope now we'll be agreeing. It will be agreeing, right? What is the balance sheet total now? After the seventh transaction, I think 1,23,000. 1,23,000. Clear? So interesting, right? Shall I go for the eighth transactions? So I will now move on to the eighth one. Eighth one. Now, check issued to the supplier of goods worth rupees 33,500. Check issued. Supplier of goods. Supplier of goods is trade creditors. Okay. Who supplied us? The creditors. Okay. For him, I have to pay 3,500. I am paying that now. Okay. I purchased goods for 3,500 without paying. Now I am calling him, sir, take the money, finish up the dues. And automatically what happens? Check issued. Then it affects the bank balance. So bank balance decreases by 3,500, and the trade creditors also be totally cancelled. Clear? So in the debit side, in the asset side also there is a decrease, in the capital and liabilities also there is a decrease, equal value. So that automatically the total will also be equal. Asset should be equal to liabilities and capital, right? Let's see. Capital, this value being 91,000. Liabilities, under that we have only sundry creditors, and in assets plant remains as it is, the value being 30,000. Furniture remains as it is, the value remains as it is. Stock also remains unaffected, 4,000. 1,19,500. Okay. 1,19,500. After the eighth transaction. Shall I go for the ninth transaction now? Okay. Now, ninth transaction. I have to start from this information. So, ninth transaction here being, okay, check received from customer amounting to rupees 7,500. Customer means the person to whom we have sold. Now he has to pay me now some money. He now makes a payment of 7,500. He is usually called debtors here commonly. So he had to subtract 7,500. One of my debtors to whom I have sold 12,500. Now he says, sir, 7,500 rupees check I have given, reduce my due. That check is deposited to the bank. Automatically bank balance will increase by 7,500. Okay. Now we'll pass the new accounting equation here. Asset side, there are two adjustments. In the liability side and capital side, no adjustments. So I just post as it is. Capital, this value being 91,000. Liabilities and sundry creditors we have this value 28,500. Third, assets, under that plant, the value being 30,000. Furniture, the value being 10,000. Stock, the value 40,000. Trade debtors, 12,500 minus 7,500, new value being only 5,000 after subtracting 7,500. Instead of that, the bank balance will be increasing by 7,500, 54,000. Am I right? Now this value is 54,000. What about the cash? Cash remains limit total value also, because the next question is also about that. For every transaction, what could be the impact in the assets? What could be the impact in the liabilities and capital? Is there any change in the balance sheet's total? All these questions may be asked in the next question, next illustration. Is that okay? Now we'll move on to the next one. Ninth one is over, right? Shall I move on to the next one? 10th one. 10th one. Withdrawn by owner for personal use. Very simple. Owner may bring the cash. Sometimes for his requirement, he can take it out from me. So withdrawn by owner. So owner is taking 2,500 cash. So cash will reduce by 2,500. Owner's amount payable to the owners will also be reduces by 2,500. Is that okay? So owner says this business should give me 91,000. Take 2,500 today. Okay. Now the balance sheet. Capital 91,000 minus 2,500. How much is that? 88,500. And second one is liabilities. We have only one liability under that. So sundry creditors, that value is 28,500. And third one is all about asset. All asset remains as it is except cash. So plant 30,000. Furniture for 10,000, stock 40,000, trade debtors 5,000, bank 54,000, but cash is now decreased by 2,500. Then now value being 14,000. What is the total? I think 2,500 decreases in both the side. 1,17,000 is the new value. You can cross verify. You can cross verify. Is that okay? I have not totaled 2,500 in the asset side as well as in the liabilities and capital side decreasing. So automatically I reduce 2,500 to both side. Clear? 10th one is over. Now we'll move on to the 11th transaction. 11th transaction. Salary paid. Salary paid. Now, salary paid. Come on, tell me. Payment means it affects the cash balance. We may make the payment out of cash. Next one being salary. It is not asset, liabilities or capital, but it affects the owner's funds. It's an expenses. So it should be subtracted from the owner's fund. Right. If it is being the expenses, it should be deducted from the capital. If it is being the income, it should be added to the capital. Assets, liabilities, capital. These three comprises accounting equation. Apart from that, two more accounts are there: income and expenses. Income will be added to the capital. Expenses is subtracted from the capital. Profit and the loss also the same. So it is going to be subtracted from the capital 2,000 rupees. Now the entry being capital. This value being 86,500. Second, liabilities, under that we have sundry creditors, this value being 28,500. Third block is all about asset. all assets remain the same except cash. So the plant being 30,000 and the furniture being 10,000 and stock being 40,000, trade debtors being 5,000, bank being 54,000, cash from the 14,200 is subtracted, so the value being 12,000. Now what is the total of balance sheet here? 1,15,000 is the new balance sheet total after the 11th transactions. Now let me move on to the last transaction, number 12. Okay. Rent received 5,000 rupees. Okay. Now what happens here? Rent received is an income, should be added to the capital and maybe in the form of cash. So it should be plus for the cash. So cash, there is a plus 5,000 rupees. Income is nothing but the amount payable or meant for the owner, 5,000 rupees. Now finally, the new accounting equation here being capital. This value remains 86,500 and liabilities under that sundry creditors 28,500. Capital should be subtracted by 5,000 rupees. Sorry, this is 81,500. In the asset side, add no. Okay, then what is the value? 91,500. Okay. Now in the asset side, do all the values as it is except cash. So plant, the value being 30,000, and then furniture, the value being 10,000, stock, the value being 40,000, trade debtors, the value being 5,000, and bank, the value being 54,000, and cash will increase by 5,000, 17,000 rupees. Is that clear? Now the final value being 119,000. Is that clear? Oh, you are getting 1,20,000. Okay. So 1,20,000 rupees. Okay. Clear? So what we have done is the accounting equation approach. Clear? In practical life, we don't follow that entire ledger balance and all, because all these things are now given to machines, right? Now we'll deal one more thing here. State with the reasons, state with effect on assets for the following transactions. Clear? What could be the effect of on assets? Whether it increases or decreases or no change. Clear? Now let's try. Purchased office furniture, payment to be made to the next month. Asset increases or decreases? Remains unchanged. Asset increases. Okay. Asset increase. What could be the impact? Asset value increase as well as creditors. The payment is going to be done in the next period, then creditors will also increase. So asset increases. Collected cash for repair services. Asset increase or decrease? Increase or decrease? Increase. Asset increases. Cash comes in, right? Cash is also a part of asset. Cash comes in means cash increases, asset ultimately increases. Goods sold on credit. Goods sold on credit. Increase or decrease? Goods sold on credit. Increase, decrease, or no change? Come on. How many of you prefer to go for this one? Raise your hands. Increase. None. How many of you think that it will decrease? Only 1, 2, 3, 3, 4. Online? Only 4 students. What about 0? 1, 2, 3, 0. Okay. What about none? None of the above. Right. Goods sold on credit. Asset will increase. Asset will increase. Clear? For example, goods sold on credit for rupees 10,000. Come on, tell me. How the things are posted in the balance sheet? You will subtract goods, am I right? You will add debtors, am I right? How much you subtract from the goods? How much you will add to the debtors? How much you will subtract from the goods? Is it 10,000? Not necessarily 10,000. Maybe 8,000. Maybe 8,000. On sale, you make a profit. Cost of the goods sold being 8,000 rupees. By adding 2,000 rupees profit, we sold at 10,000. Goods will decrease. Stock decreases by 8,000. And debtors increases by 2,000. And capital increases by 2,000. Ultimately, there will be increase in the assets balance by 2,000 rupees. So, no change is incorrect. Of course, increase also the correct one. Decrease is also not correct. I think no one has given the answer for the correct one. Minus 0.25 marks in your exam. Do you know? So, in case of negative answer, we will get minus 0.25. Okay. Sir, we thought, sir, everything is correct, sir. You confused me, sir. No. Check the previous accounting equation approach. Whenever there's a sales, it includes some component of profit. Logically, you thought the stock will decrease, debtors will increase, no change is logically correct. One logic. Next one is stock goes out, you thought that is an asset, it is going to decrease, so decrease is also correct. But you forgot that it will be added to the debtors. Decrease of the stock has impact in either cash as well as debtors, right? You missed that. So, usually no change. But we add the profit, no. To that extent of profit, we will get more cash. That ultimately leads to increase in the assets balance. In your examination, you might have studied all the questions, but they asked only the Cth question in your exams. They won't ask the first and two, A and B, they will not ask. So, you have to be a bit cautious while answering here, right? Hope. So, you can mark 0.25 in your total. What can you do then? Make an error note and write this one. So, this is a challenging one. So, if you are able to make all these things in a note form, those areas you have to repeat again and again so that you will be now removing your error areas. That's why I asked you to have an error note. Clear? Now, withdrawal of cash by the owner for personal use. Withdrawal of cash by owner for personal use. Come on, tell me. Increase or decrease? Increase or decrease? Increase. Increase. Huh? Decrease, you know. Isn't it? In your balance sheet, cash is going to be minus item. Ultimately, it is going to be subtracted from the owner. So decrease is the correct answer. Clear? Hire an employee as a sales manager of the north wing. Come on, tell me. Hire an employee as a sales manager on the north wing. They operate in businesses in all the directions in India. They want to have a specialized sales master, sales personnel for the north side of India. So they appointed one person. What could be the impact in your balance sheet? What could be the impact in the balance sheet? Sir, we don't want to score minus 0.25, sir. At least 0 is better than minus 25, minus 0.25. Huh? Come on, tell me. Guess. No effect. Why? No effect. Why? It is not an accounting transaction. It is not measurable in cash. If I am admitting a person as an employee, I don't make any payment. By the month end for his service, I am going to make the payment. Salary will be the payment. That reduces the cash balance. Rent is the payment. That reduces the payment. But while taking the possession of the property, I don't pay anything. While appointing the employee, I don't pay anything. Not quantifiable in the form of cash. So transactions can be recorded in your books only if the transaction being cash business transaction. It should be measurable in terms of cash and it should be related to the business. In these two cases only you can post that as your transaction, else you don't. But it is of course only an appointment. There is no cash. Clear? Returned goods worth rupees 50,000. Returned goods worth rupees 50,000. Come on, tell me. Huh? Increase or decrease? Again the same confusion, sir. Huh? Increase or decrease or no change? Increase or decrease or no change? Or none of the above, sir. Oh my God. Oh my God. Assume the same. In case of sales. What is the accounting equation? Goods decreases, debtors increases in case of what? Credit transaction. Goods decreases, debtors increases. But, what's that but? Owner's fund also increases because there's a capital. There's a profit. Maybe 1 lakh rupees worth of goods is sold for rupees 1 lakh 20. Usually you will sell for a profit. So goods will decrease by 1 lakh, debtors will increase by 1.2 lakhs and capital will also increase by 0.2 lakhs. Am I right? That's what about the sales transaction. In case of sales return, what happens? Okay, this fellow says I don't want the goods, sir, it's not up to the mark of my requirement. I am returning. Okay. If he is returning, my goods will increase by 1 lakh. Debtors will decrease by 1.2 lakhs. My profit will decrease by 0.2 lakhs. Otherwise, ultimately 0.2 lakhs will be decreasing your assets value. To the extent of profit has lost. 50,000 rupees sale includes around 10,000 rupees profit. The moment he returns, the profit has gone. To the extent of profit, the assets value will decrease. Isn't it? So, what is the correct answer? Decrease is the correct answer. Understand, C and F are inverse entries. C and F are inverse entries. You will be able to understand. How? I have not stated that properly anyway. Okay. Okay, purchase return. Okay, you can think over. Then in case of purchase return, no change. Okay, you assume that way, I assume this way. Sales return like. Okay. In case of sales return, it's clear now. In case of sales return, asset value will decrease. In case of purchase return, no change. No change. Is that clear? Don't find the answer is not in our text. Singer Academy text doesn't have that. Okay. Clear? In case of purchase return, no change. Clear? You understand? Now, case G. Case G. One of our debtor agreed to pay his dues to Mr. C, a creditor of the company, with the same amount being due to him. Come on, tell me. In our accounting equation, in the liability side, there is a creditors amount payable being 100. In our asset debtors, there is an amount rupees 100. Okay, debtor has to pay me, creditors for whom I have to pay. And I call the debtors and creditors. You both are closer now, you settle each other. Now what happens? Debtors also cancel, creditors also cancel. So what happens then? Huh? No change. How? If 100 rupees decreases in the asset side, liability side also has a decrease, then what happens? The value will be decreasing. Asset side also decreases, liability side also decreases. Is that clear? In the asset side, debtors is decreasing. In the liability side, creditors is decreasing. In total, balance sheet overall total decreases in both the side. In both the side. Now, entered into an agreement with Mehta and Co. to purchase all the raw materials from the next year. What about the effect? I entered into an agreement to purchase in the next year onwards. It's normally a transactions of non-cash nature. There is no cash transaction. It cannot be measurable in terms of cash. I committed, sir, from the next month I will purchase. I'm not purchasing, so it is not accounting transaction for the recording purpose. So no effect. No effect. Is that clear? Hope now you'll be able to understand. Usually you'll get confused where goods is sold on credit. So you have to be double cautious. What could be the impact in the assets? Okay. Once you are able to score, you can get good mark also here. You just understand the concepts will be clear now. Clear? Here I just stand corrected. Either it may be purchase return or sales return. No, both the case I will explain. In case of purchase return or sales return. In case of purchase return, what happens? Cost being 10,000, profit included here being 2, sale price 12. Okay. In case of return, what happens? In case of return, what happens? This will increase the stock balance. Stock balance. And first let me record the sales transaction here. Sales transaction here. For the sale transaction, what could be the impact in the accounting equation? Stock being decreases by 10. Am I right? Minus 10. And debtors increases by 12. Ultimately, the difference between these two profit is added to what? Capital. If I total the balance sheet, in the liability side 2, in the asset side also 2. Isn't it? Isn't it? In case of sales. In case of sales. Stock decreases, debtors increases. The difference between these two, profit is going to be payable to the owner, so owner's balance is increasing. Sometimes later, he returns the goods. 50% goods returned, sales return. 50% returned. It means 6 rupees will be the sales return. We know the real cost of that is 5 rupees. The profit for that be 1 rupee. 50%, right? Exactly 50%. Out of 2 items, 1 item is returned. So for 2 items, I got 2 rupees profit. As he returned 1 item, 1 rupee profit is now reduced. Because of the sales return, what could be the impact? Stock increases by 5, then it becomes 15. Debtors decreases by 6, then it becomes 6. Capital decreases by 1, now it becomes 1. Is that okay? So now, what happens here? What happens here? Stock balance minus 10 plus 5 becomes minus 5. Debtors plus 12 minus 6 plus 6. Ultimately, it's 1. Earlier, it is 2 rupees. After one subtraction of 1, now the balance is 1. Your overall asset balance is decreasing from 2 to 1. Before the sales return, the balance is 2 rupees. After the sales return, the balance is only 1. Is that okay? Clear? Return. Now we'll think the same for the purchase return also. We'll think the same way for the purchase return also. In case of purchase. In case of purchase, we never bother. We never bother about the profit component in it. So we assume 10 rupees, that's all. On purchase, what could be the journal entry here? On purchase. Stock increases by 10. And if you are purchasing creditors also increases by 10. Am I right? Clear? Sometimes later, we thought it is not worth. I am returning this. So now the balance sheet total being 10, 10. 50% is now written. How much? 50%. 50% of 10 rupees is how much? 5 rupees is written. After this return, what happens here? Stock decreases by 5, creditors decreases by 5. Now what about the new total of the assets? 5. New total of the liability side? 5. Now what could be the impact in the asset side before or after this transaction? Earlier it was 10, now it is only 5. So there is a decrease. In case of purchase return, now I am going to give the summary. In case of purchase return, what could be the impact in asset? Decrease. In case of sales return, what could be the impact in assets? Also decreases. From 2 to 1, there is a decrease. In case of purchase return, again it is 10 to 5. Also in total, it is also decreasing. Whether it may be sales return or purchase return, in both the cases, total assets value will be decreasing. Is that clear? Hope now you'll be able to understand the logics of the impact on assets and liabilities due to the transactions. Clear? So some more leftover concepts here. Accounting equations. Either it may be asset is equal to capital plus liabilities, or capital is equal to assets minus liabilities, or closing capital should be opening capital plus profit. Any additional capital, if there is any drawings, you have to subtract this. From the opening capital, in case of profit is added, in case of loss it's subtracted. Is that okay? Profit or loss? Profit could be of two types. One is income or revenue. Another one is gain. Okay. There's a difference between revenue and gain. I already told you. Whatever the amount I get for that, I have to work. It's called revenue. Whatever I get It's absolutely free. I don't want to commit anything to do. Then it's called gain. In case of loss, it may be either expenses or loss. Expenses means I pay, I enjoy. I pay the rent, I occupy the property for a month. Then it's my expenses. I paid, but I didn't get anything lost. I had 100 rupees in my purse and later I lost it. On verification, there is a small hole in my pocket, 100 rupees has gone, loss. Both are loss. For whatever the payment, I gain something, then it's expenses. Whatever I pay, for that I gain nothing, is called loss. Similarly, for income, for whatever the receipt I have, for that I have to work, then it's my income. For whatever I get, I don't work, then it's my gain or profit. So profit includes revenue and gain, and loss includes expense and loss. This will be added, this is subtracted. That we have already studied in accounting equation approach. Opening capital, if there is additional capital, add. If there is any withdrawal, minus. Because of purchases or sales or any expenses spent, there will be some changes in the capital also. That will be called as profit. Is that okay? Transactions which increases the capital, usually profit and additional capital added. Transaction which decreases the capital, usually loss or drawings subtracted. Okay. And classification of accounts we have seen. In case of traditional approach, we have two broader classification, personal and impersonal. That impersonal can further be classified as real and nominal. In case of personal account, can be classified as natural, artificial or legal or representative. Examples for natural being some proper name, you and me, Raj and Bimal. Artificial legal, IDBI Bank and SBI Bank and your institutions, whatever it may be. Representative personal account, usually the nominal account will have some prefix and suffix like outstanding, accrued, advance and all will be called as representative personal account. Real account will have some tangible value or tangible views like a building. Nominal may be expenses and income. Accounting equation approach. In this, account will be classifiable into three: capital, assets and liabilities. These three will be assets and means accounting equation approach, right? Apart from that, we have the expenses and income. That expenses and income will ultimately have the impact on the capital only. You understand? So capital, assets, liabilities, expenses and income. Under the equation approach, whatever the transaction may be, automatically you can adjust and prepare the final balance sheet easily. That's the advantage of accounting equation. We never bother about the debit, what comes in, credit, what goes out, all in the case of accounting equation approach. Of course, you can prepare all the accounts similar to the way we prepared in traditional accounting approach also, without mugging up that debit and credit here. Is that okay? Capital, assets, building, cash and bank. So some examples are also be given here. Liabilities, debt and creditors, expenses being the rent and salaries, income being sales and rent receipt. The double entry system, what we follow today, debit and credit, is actually propounded by Luca Pacioli. For every transaction, we'll have two transactions. Okay, one debit will have equivalent credit also. Actually, the term debit represents debito and credito in Latin. Okay, it's not in English, right? Originally, it is borrowed from Latin, debito and credito. In our colloquial language, addition, subtractions, plus or minus. That's how I started and guiding you while passing the transaction. You just do plus or minus like that. Plus is nothing but debit and minus like credit. Okay, debito, credito. In his language, he used debit and credit. Okay, and in the traditional approach, personal, real, and nominal we have already studied. Apart from that, you have to understand what is called liability. Okay, results from the past transaction are even. For that, you have to make the payment in later period, that too measurable in terms of money. I purchased goods in credit. It's a transaction, happened sometimes earlier. For that, I have to pay money to some third party. He is called as creditors. That payment is also measurable, 1,000 or 2,000 rupees. That is called liability. You have to understand the difference between liabilities and provisions. Liability is nothing but confirmed one you're supposed to pay. Provision is suppose some money you have to pay later on. I'm not sure how much I have to pay. So I may make some money away. Okay. So that is called provisions. Liabilities is the confirm. I purchased for 1,000 rupees. I told him I'll pay in month's time. Then in month's time, I have to pay only 1000 rupees. If I order some product that seller says, sir, I'm not sure what's the price. I'll purchase for you and keeping it, making it ready. That time I tell you what's the amount you have to pay. So roughly what's the amount, sir? Roughly 10,000 rupees. Roughly 10,000 means it may be either 11,000 or 9,000 also. I am not sure. So I have to keep money ready for paying that. Then it's called provision. Is that okay? So liability is nothing but confirm amount is payable in future. Provision is nothing but estimated amount may be payable. May be payable. The example being purchase in credit. If I purchase in credit, I have to make the payment later on the maturity date. In case of provision for doubtful debt is one of the nice example for provision for doubtful debts. I sold the goods in credit, then that party is my debtor. I have doubt that fellow will pay me or not, or will he cheat me or not. If there is a chances that he will not pay me and I cannot collect the money from him, I think hereafter I will not sell to him. But anyhow, I sold already, it's a loss. If he gives happy, if doesn't give, so I will be double cautious to manage that. Then it's called provision. So I'm making some money away for meeting that loss called provision for doubtful debts. Similarly, we have the two differences, reserves and provisions. You already understood the difference between liabilities and provisions. Now you are going to understand the difference between reserves and provisions. Is that okay? So in case of provision, it's a charge. And in case of reserve, it's an appropriation. Okay? Charge and appropriation, the difference between these two is what? Charge means you have to mandatorily pay out of your profit. You understand? Provision, reserve is nothing but whatever the surplus amount you have, you can use it for some other purpose later on, so you're keeping it out. Don't panic this term. If you are debiting in the P&L account, then it's a charge. It's a sharing, is called appropriation. Example for this is provision for doubtful debts. Example for this is general reserve. Don't panic the difference between these two now. You have to understand only these two. What is that? Provision is a charge, reserve is appropriation. How will I understand more clearly, sir? Don't panic. You can learn that while preparing subsequent chapters like final accounts. You now understand that the two terms, reserves and provisions. Provision is a charge, reserves is appropriation. Example for the provision being doubtful debts. Example for the reserve is general reserve. What are the types of transaction entries you can pass? Opening entry, closing entry, transfer entry, adjusting entry, rectifying entry. So many entries are there. Currently, we have completed only transaction entries. We have completed only transactions entry. Whatever the transaction may be, for that, how can you record that as a journal entry? It's called transaction entry. Goods purchased. Entry for that is purchases to cash, whatever it may be. Sales and building purchased. Loan borrowed. All these things are transaction entries. What about the opening entry, closing entry? Previous year balance sheet, we start with a fresh journal entry, right? Assets account debit to liabilities to capital. That is called opening journal entry. We'll study the other journal entries in subsequent lectures, right? That's all. So how to pass a journal entry? We have followed these 9 steps and followed. And finally, you have to understand the concept called subsidiary book. Subsidiary book. Special journal, otherwise named as special journal. Otherwise, it is named as book of original entry or prime entry. We have cash journal, goods journal, bills journal, and those journal cannot be recorded in the subsidiary book. We can prepare as a journal entry, which is called journal proper. Here, the cash book is a subsidiary book, but can be treated as principal book also. These are the small point you have to understand. I may solve an illustration under this entire model, then I'll give the summary back so that we'll be able to understand in much easier way. No need to panic. In the subsequent lecture, I'm going to make you understand this concept. I'm making you to understand these two concepts in detail. What are they? The opening journal entry as well as transaction entry. Thereafter, we'll deal all these things along with the final accounts and the rectification entries, right? So this is all about the fundamentals